Big changes are happening in the electric vehicle battery industry, and it's affecting Tesla's decisions. The Wall Street Journal today reported that Tesla has shifted its battery strategy to seek United States tax credits. Climate law has accelerated race to make batteries and their ingredients in the United States. Look what happened. Tesla is reportedly pausing its plans to make battery cells at Giga Berlin electric car factory as it looks at qualifying for US electric vehicle and battery manufacturing tax credits. People familiar with the matter said to the Wall Street Journal. The company, which has been working to produce its own batteries for its own electric vehicles, has discussed shipping cell making equipment it had intended to use at Giga Berlin factory back to the United States. The people again told to Wall Street. Making more batteries domestically could help Tesla qualify for additional tax breaks available under the Inflation Reduction Act, also known as IRA, which President Biden signed into law last month. Keep that in mind, Inflation Reduction Act. This law provides production tax credits that could offset more than a third of the cost of electric vehicle battery packs, analysts say, so long as the rechargeable cells are made and packaged in the United States. It also extends the $7,500 tax credit available to buyers of certain electric vehicles whose batteries meet various sourcing requirements. Friends, Tesla's move reflects how the United States' new law is reshaping the EV industry, accelerating the race to secure domestic supplies of battery cells and related ingredients. Tesla didn't immediately respond to a request for comment from the Wall Street Journal. In the days after the bill became law, the company told Texas officials that it was scouting regional sites for a battery plant that would refine lithium, a key battery input that today is mostly processed in China. The shift in Tesla's battery strategy comes as energy costs in Europe have gone up tremendously. In the meantime, you get tax credits if you produce batteries in the United States. Sham Kunjur, General Motors Executive Director for Electric Vehicle Raw Materials, said discussions with outside companies to build out a US battery supply chain have heated up since this law took effect. I'm talking about the IRA, Inflation Reduction. Our thought process was that we would do this over a period of time, but with the IRA, we are actively working on figuring out how to accelerate, he said. GM in the past year has invested in companies and struck long-term deals to secure future supplies of lithium, cobalt, and other battery materials. Today, the United States plays a relatively small role in making the lithium-ion batteries that power electric vehicles, and a smaller one in producing the raw and intermediate ingredients that compose battery cells. For example, China processes more than 2/3 of all nickel and cobalt globally, compared with 1% or less of each minerals for the United States, according to research firm Benchmark Mineral Intelligence. This new law, the IRA, Inflation Reduction Act, seeks to ease that disparity by incentivizing car makers and battery component companies to invest in the United States supply chain and reduce their reliance in China. Among those incentives is a $35 per kilowatt-hour credit for US-made battery cells. The law also affords $10 per kilowatt-hour for domestically produced modules or collections of cells, and additional assistance for companies making raw and intermediate battery materials in the United States. If all of those production credits applied, a 75 kilowatt-hour battery pack such as those used in the long-range version of Tesla's Model Y electric vehicles, compact sport utility vehicle, could see its cost drop by nearly 40% according to Bernstein Research. That means Tesla Model Y 40% cheaper. Tesla and one of its cell suppliers, Panasonic Holdings, share a Nevada battery factory and are likely to be among the biggest early beneficiaries of those battery production incentives, analysts said to Wall Street Journal. Tesla also has been trying its hand at manufacturing cells in-house, an effort designed to reduce the cost of a key component and mitigate the risk of battery shortages. The company has been producing those new larger cells at a pilot facility in Fremont, California, and had been planning to do so at its factories in the Austin area and outside of Berlin. Friends, Tesla's chief executive Elon Musk has long discussed the importance of boosting cell supply, saying recently that lithium batteries are the new oil. I think this is a very interesting thought. Do you agree that the lithium batteries are the new oil? Traditional car makers, including GM and Ford, also are expected to benefit from the tax credits as they race to open new battery factories through joint ventures with Korean cell manufacturers. It almost seems too good to be true from a battery maker's perspective, UBS analyst Tim Bush said of the production credits. Keep in mind that this credit that I'm talking about has to do with production. GM and its partner LG Energy Solution started battery cell production last month at a plant in Ohio and have 2 more factories in the works. Ford's joint venture with SK Innovation is planning 2 battery factories in Kentucky and 1 in Tennessee. And last month, LG and Honda Motors said they plan to build $4.4 billion battery factory in the United States, targeting mass production by the end of 2025. Friends, it couldn't be determined how battery cell makers and auto giants will divide the rewards of the production tax credits, or how much tax credits may get passed into the consumers in vehicle pricings. We don't know that yet. RBC Capital Markets, in a research note this week, said the tax credit for the US battery production could deliver $3 billion to GM in 2025 if the company hits its goal of selling 1 million electric vehicles in North America that year. It is also likely to be easier to qualify for the production credits than it will be for consumers to receive the 7,500 tax breaks, which has been in place since 2009, said Mr. Conjur, the GM executive that I just quoted. That is because the climate law essentially disqualifies from the consumer tax breaks vehicles that get battery raw materials or components from China, which dominates the supply chain. The production credits have no such restrictions. So you think it's very expensive for Tesla to ship all the battery equipment it had gathered at Giga Berlin to build the battery cell, which was almost ready, the cell building? Well, imagine if they produce in the United States, Tesla and the other companies will get so much tax credit per kilowatt hour that it apparently, according to this research, will drop the price of Tesla Model Y by 40%. Now, will Tesla price at the consumer level be dropped by 40%? We don't know, but we'll see how things go. But there is a heated race to build batteries, to produce electric vehicle batteries in the United States. And Tesla is making moves for that, according to this research and report by Wall Street Journal. This is Armen Harayan from TalkNews.com. Please subscribe to our channel for daily Tesla news. Ring the bell after you subscribe, and let me know your thoughts about the heated race to build electric vehicle batteries in the United States and a possible drop of Tesla Model Y cost in the near future. Have a great day. God bless you, everyone.